So it's not like this is a gradual rise here. We're going up the curve where everything does this. We can already start to feel that it's happening so fast. It's like, well, where's it going to be in another 2 years' time? And then another 2 years' time? It's beyond our comprehension. Well, it's the best performing asset in all human history. Since 2012, it's up 64 million% since I started looking at it. Now, I didn't unfortunately keep my original investment all the way through, but I know some people who did. I bought it and sold it, but have held on for a very long time, and all of my net worth is basically in this. In my liquid net worth is in crypto. So it goes up massively fast, on average about 145% a year.
Every few decades, the world quietly enters a new economic paradigm, one that doesn't just shift wealth, but redefines it. We saw it with industrialization, with the rise of the internet, and with globalization. Each time, those who recognized the change early didn't just survive, they built dynasties. Now, we're entering another one of those moments. A moment where the rules of productivity, value, and even money itself are being rewritten faster than most people can comprehend. What's happening right now isn't linear, it's exponential. The global economy, our currencies, and our institutions are being forced into a radical transformation. And at the center of it all lies a multi-trillion-dollar opportunity, one so vast that even seasoned investors are struggling to grasp its full scale. We're not just talking about a technological revolution, but a complete restructuring of human labor, intelligence, and capital. Those who understand it now will be the ones who own the future. Those who don't will be priced out of it. That's where macro investor Raoul comes in. The former Goldman Sachs executive and founder of Real Vision has built his reputation by spotting macroeconomic inflection points before the mainstream does, from the rise of emerging markets to the crypto supercycle. And in this interview, Powell lays out what he calls the most important transition in human history, one that will determine who thrives, who collapses, and what comes next for the global economy. Because if you look around, you can already feel it. The pace of change is accelerating, and most people are still standing still. So before we dive in, make sure to like this video, subscribe, and stay to the end, as Raoul breaks down how this massive economic transformation is unfolding and how investors can position themselves before it's too late. Thanks, and enjoy the video.
So everything going to zero, there's two forces that really I'm focused on. One is, you alluded to earlier, and we can go into it in more detail in a bit, which is the fact that the system of money that we know is being debased, which means they're printing money. And why are they doing that? They're doing that to pay the debts that we've accumulated over the years as nations, not only the United States, but all over the world. And that's driven by this aging population that's been happening. So money essentially keeps falling in value, and people realize that by the fact that their wages actually don't go up, but the cost of things goes up. And I'm not talking about food and stuff. That kind of inflation is more cyclical. What I'm talking about is the important things for young people is like, can I buy a house? So young people start thinking, why can't I buy a house? Why do houses still go up? And I'm working really hard and I'm working 2 or 3 different jobs. That's because optically they're devaluing the value of the currency, and it makes these assets expensive. But their wages don't go up in the same way. So that's one thing. The value of the currency goes to zero over time. So it's not an instant collapse. It's a slow thing that just makes life harder for everybody. The second thing is that most economic value is based on 2 things, either knowledge or labor. You either physically do things or you mentally do things. The value of those 2 things over time is going to zero because of the rise of AI and robots. What are we? We're, the physical manifestation of intelligence, and we can do things with our physical bodies. So as you look out to the future, the rise of robots with AI brains, whether it's a car, self-driving car, is just a robot with an AI brain, a drone can be a robot with an AI brain, or a humanoid robot with an AI brain. And our whole economic system has been built on either physical labor, you build things, do things, service things, clean things, or you're getting paid to, whether you're a clerk in an insurance company or whether you're a lawyer, you're being paid for your knowledge and your intelligence. Now, as this revolution in AI accelerates, the cost of compute keeps going down, but intelligence keeps rising of these models. Right now, the frontier models are probably having an IQ similar to like a person with an IQ of 150. So that's extremely smart, but it's doubling every year. So by next year, it's an IQ of 300, let's say. Well, that's smarter than any human ever. And then it doubles again, and it doubles again. And all it's taking is more energy and more compute. There's this flywheel that keeps driving this. And so there's a mad scramble to lower the cost of energy, whether it's via solar, nuclear, whatever. That drives more compute. There's a mad scramble to make computing more efficient and faster. And that drives all of this intelligence flywheel further. On the robotics side, we've only really started that journey. Yes, we've got self-driving cars. So, self-driving cars, let's think of a Tesla. At scale, they've got cameras that are learning, like a human, how to navigate the world around them. So it's not a pre-programmed thing. It kind of uses a map, like we would, and then looks at the environment around it and says, well, if that car pulls out, then this is what normally happens, etc., exactly as we learn. These are these kind of visual neural networks. So then you've got this thing that same brain can be put into the humanoid robot, and that over time is getting cheaper in compute costs, even though people are spending so much on data centers because there's more and more compute going on. And then the robotics at scale, I mean, there's already humanoid robots in China, and they're like 15 grand. And yes, they don't have the intelligence of what Tesla are trying to do and what others are trying to do. But eventually, you'll have if you think about it, let's say a 15 grand robot with above human intelligence. So if you think of employing somebody, they cost you what? The average salary in the United States, like 48 grand a year or whatever. Okay, so for one-off cost plus a bit of electricity, you can get something that will work 24/7, never has a sick day or anything else. Okay, and that's what role do we play? We'll come on to what role we play in society and economics later, but that's the scale of what is happening, and it's happening at an exponential rate. So it's not like this is a gradual rise here. We're going up the curve where everything does this. We can already start to feel that it's happening so fast, you can't comprehend it. When you're on Twitter and you see these kind of models where you can just put in a couple of words and make it almost a movie out of it. 2 years ago, ChatGPT was barely started, and now we're at this. It's like, well, where's it going to be in another 2 years' time? And then another 2 years' time? It's beyond our comprehension.
You've said in the past that we only have 5 years left to prepare before the world changes forever. If someone's watching this right now and they do nothing, what does their life look like in 2030?
So, firstly, we've got that first big trend, which is the debasement of currency. So if you don't do anything about your life, you carry on, you do your job, you don't make investments, you'll never be able to afford that house or invest in other assets. What is an asset? You hear this, people talk about, oh yeah, you want to buy assets. And people use that word. An asset is just a way of locking up savings now to use it for consumption later. It's like deferred consumption. And you should get paid an excess return for locking your money away. Problem is, that's how everybody's parents got wealthy. They bought houses for nothing. They put money in the stock market when it was really cheap. And at the end of it, they've got money. But young people now don't have that. There's no choice for them. They can't afford any of this stuff. So that mega trend of that debasement of currency means that you end up doing one job, two jobs, three jobs. And we're seeing that with everybody. I alone do 3 jobs. Everybody does this now. That only gets worse. And the rich get richer, the poor get poorer. The rich own assets. Regular working people don't. And they don't think about it and they don't really understand it. And they think, well, I can't. Because that's for people who have money. That's for people who know a broker on Wall Street, or that's the people who have an investment advisor. But it's not true. There's a revolution going on in stuff like crypto that makes the big difference.
Pal begins by addressing what he sees as the 2 most important and dangerous forces reshaping our world: the debasement of money and the collapse of traditional value creation. Governments across the globe, burdened by decades of accumulated debt and aging populations, have resorted to printing money to cover shortfalls. But the result isn't prosperity, it's dilution. Every new dollar devalues the old ones, eroding the purchasing power of the average worker. This is why hardworking people can no longer afford the same assets their parents could. The system rewards asset owners, not wage earners. And as Pal explains, that's why young people feel trapped, working 2 or 3 jobs, watching the price of homes and stocks rise out of reach. The reality is that fiat currencies are designed to lose value over time, while scarce assets, real estate, equities, and increasingly, digital assets capture the upside of that inflation. But that's just the first half of the story. Because even as traditional money loses value, another shift is happening beneath the surface, one that threatens to disrupt the very foundation of labor, knowledge, and productivity. Artificial intelligence and robotics are driving a new form of deflation, one where human contribution becomes less valuable every year. As intelligence and automation compound exponentially, the gap between man and machine widens. And this, Pal warns, isn't decades away, it's already here. And that brings us to the real question. What happens when the economic engine that has powered the modern world, human labor, no longer defines growth or value? Let's get back to Raoul Pal's video.
Okay, let's go to 2030. So what happens at 2030? Well, we've already been talking about intelligence going exponential. So it starts to do weird things to the job market. We know that. Everyone's talking about that. But it actually does really weird things to the economic machine. So economy, the trend rate of growth of an economy, how the United States grows or whichever country, is basically this formula, which is population growth, more people means a bigger economy, how productive they are, what output do they do when they work, and then debt growth, which is a way of kind of covering up the cracks, where you just put debt and things grow, but that has to be paid back in the end, and we kind of hit that in 2008 in the financial crisis, and the whole economy is based on servicing the debts that we accumulated ever since then. After 2030, if you think about it, what I've described with the AI and the robots is infinite humans. That's what we're building here, is infinite humans that can come into the global economy. Okay, great. Economic growth picks up. But who gets paid for that growth? Who gets paid? Is it the robot companies? But it's not us. So then what do? Get a universal basic income? Maybe, but the government haven't got any money. So how are they going to pay that without debasing more currency? Okay, that's pretty fucked. So then you've got to think about, okay, if these kind of forces are at play, then what also happens when you put superintelligence into things like financial markets? Am I going to be a better investor than something with an IQ of 600? No. Can I operate faster? No. So what is a financial market at that point? How does the economic system work? The AI has a system of money. They're already trying to put AI and crypto together because an AI still needs to be paid for it as an AI agent. Like, agents are really like Fiverr, a website where you can choose somebody to do a specialized task. So an agent still needs to get paid like somebody on Fiverr does because they've got, rent and they need to eat food and live their lives. But the AI needs, go back to the same thing, compute and energy. So it's going to get paid. And some of them will generally operate at a profit, so they'll bear profit margin. But their agents are dealing with agents. They're subcontracting out work to each other. And so there'll be a system of money between them, which will likely via crypto rails is the only way of paying each other fast enough. So they're getting the economic pie. How does that work? If the agents are making the pie, people have been talking about the fact that single people can build billion-dollar businesses using AI. One person. So the whole economic system gets weird. It gets weird that it starts growing at an accelerated rate. The value doesn't accrue to us. Our savings have been debased, so they're basically worthless. And so the uncertainty becomes massive. My job as a macro investor, as a macro guy, I've, for my whole career of 30 years, have invested in big picture trends in economies and markets, looking into the future and saying, where's the world going to go? And creating the linkages and betting on that. And here we've got to the first place ever for me, where I get to some date like 2030, could be 2032, I don't know, where I have no idea. And so if I've no idea, and I'm considered an expert in doing this, and you listen to the AI people, they don't really know. Nobody really knows. The governments have no idea what's happening. I'm thinking, okay, well, if I'm right, we've got about 5 years to sort our shit out. And so that means if I'm trying to think, how do I get through this massive change? This is going to be the biggest change to human civilization in its history, because we were always the top of the tree, and now we're not. We're the next rung down. And then eventually there'll be artificial superintelligence, which will mean that the regular AI will be the next rung down, will be the third rung down. So if that's the case, the easiest way to get through it is to try and make as much money as possible now, so you're buffered from it. You know, if you can observe it from a beach in the Cayman Islands drinking a pina colada, it's better than being disrupted in everything that you do.
How do you your life for the next 5 years?
So I think almost everybody knowing this understands why I use that kind of mimetic language of how to your future, because everyone feels like their future's been when they looked at their parents, they were buying houses in their 20s. You know, if I go back to when I bought my first house or apartment, I was working in investment banking in London. I was like 25. I wasn't earning a massive salary, but I was in a high-paid industry. Okay, fine. But I bought an apartment. It was 3.5 times my income. The same apartment in London for the same investment banking employee who's 25 years old, 10 times, 12 times. So even the deposit now is more than I paid for the house. I mean, that's how we are, and it's only getting worse. You see, as we keep debasing the currency by 8% a year, these assets naturally just go up 8% because, again, it's the optics of the denominator, the value of money falling, so it buys less. So that goes up, and then we got normal inflation. Just, you know, go to the bloody supermarket or a restaurant in the United States. It's insanity how expensive it is now. But wages, well, they go up about 3% a year. Maybe if you're really lucky, 5% a year. But still, you kind of feel like you're on the hamster wheel and you just don't get anywhere. And that's what we've got to solve for people. Because if you don't break out of this, you're trapped. And it's a huge trap. And it's not going to change.
What do those steps look like?
There's weird times when something happens and people don't realize it at first, but it's a systemically gigantic thing. And this was cryptocurrency. So now people think, well, Bitcoin's at 100 grand, you know, or 120 grand. You know, what can I do? I can't afford it. No, that's not the point. You can buy 10 cents of it. It still goes up more than any asset. Well, it's the best performing asset in all human history. Since 2012, it's up 64 million % since I started looking at it. Now, I didn't, unfortunately, keep my original investment all the way through, but I know some people who did. You know, I bought it and sold it, but have held on for a very long time. And all of my net worth is basically in this. In my liquid net worth is in crypto. So it goes up massively fast. On average, about 145% a year. We're all told to put our money in a 401k, and they put it in the S&P 500, and it goes up 12% a year. So if 8% of it is currency debasement and there's 3% inflation, you're actually not making money by investing in the S&P 500. But that's what you're told to do by the system.
By 2030, Powell argues, the global economy will face a paradox. Productivity will soar, but ownership of that productivity will concentrate in fewer and fewer hands. Machines, algorithms, and autonomous agents will create infinite output, but humans will capture less and less of the reward. Governments, already drowning in debt, won't have the fiscal power to cushion the fallout without printing even more money, further eroding the value of savings and wages. In that environment, traditional investing loses its footing. Markets become dominated by superintelligent systems. The entire concept of work changes, and even professional investors will struggle to compete with algorithmic entities running on AI. So where does that leave everyone else? According to Powell, survival and prosperity will depend on one thing: owning the assets that benefit from this exponential curve, rather than being crushed by it. This is why he believes digital assets, particularly crypto, are the single best asymmetric bet of our time. Crypto isn't just another asset class, it's the native financial layer of the new economy. As AI, robotics, and automation reshape industries, they'll need systems that can move value instantly, transparently, and without permission. That's exactly what blockchain enables. And as this integration deepens, capital will flood into crypto rails not as speculation, but as infrastructure. For investors, This next decade isn't about playing it safe. It's about positioning ahead of the biggest wealth transfer in modern history. Because while most people are watching the chaos, the smart money is already preparing for what comes after the disruption, a digital economy where human capital may shrink, but digital ownership reigns supreme. And let us know in the comments how you're preparing for this exponential age. The coming transformation will rewrite everything we know about money, markets, and value. And as Raoul Pal reminds us, the window to get ready is closing fast. So if you found this analysis valuable, make sure to hit the like button, subscribe. Thanks for watching.